welcome to Global Insights with me, Punita Kumar Sinha. In this week's episode, we discuss the outlook for the technology sector. Many of you have been reading headlines about companies like Flipkart, Uber, and other startups continuing to get funded by venture capital investors. With companies like Facebook, Twitter, LinkedIn, and WhatsApp changing the face of social media, it becomes imperative to ask the question, is this technology sector demand-based or is there a lot of hype? In other words, is the technology sector becoming a bubble or is there a genuine boom? First, we're going to get a short report from Sriram Iyer.
The world's most storied startup, Facebook, took 3 years to be worth $1 billion and another 5 to hit $50 billion. Online taxi aggregator Uber, formed nearly 6 years after Facebook, took just 5 years to reach the $50 billion mark. An anonymous messaging app, Yik Yak, took less than 3 years for the same feat. This is not a story of Silicon Valley silhouettes. It's happening in your neighborhood in India too. Venture capitalists invested over $50 million on just 2 occasions in 2013. That went up to 12 companies in 2014, and this year, with 4 months still to go, there are more than 25 startups that have already raised at least 50 mil each. The 3 poster boys of Indian e-commerce, Flipkart, Snapdeal and Ola, alone have raised $5.6 billion this year. With 150 million active internet users in India alone, only growing in number, the sky seems to be the limit for e-commerce in India. The dreamy-eyed young men and women with an app of their own are the flavor of the season, and they're getting rich. Very, very rich, while an entire generation watches in disbelief. Those who lived through the tech crash at the turn of the century can't help but fear the worst. Who will stand vindicated at the end of this cycle? The dreamers, or will the older hands get to say, "I told you so"?
Could capital continue to flow into startups despite high valuations? And how is India placed in this world of startups? Joining me today to give more perspectives are Deven Parekh, Managing Director, Insight Venture Partners, joining us from New York, and Mr. Narendra Gupta, co-founder, Nexus Venture Partners, joining me from Silicon Valley, San Jose. Thank you, gentlemen, for joining us today. Narendra, let me start with my first question to you. Do you think the valuations of the technology sector are getting frothy? Are you concerned?
Yeah, Punita, it's really a pleasure to talk with you. I think that's a very, very difficult question to answer. And the way I think about it is like this, that if we pay high valuations for companies that are leaders in the space, it is okay. Maybe you are paying valuations that are 2 or 3 years ahead, but you will get a good return in the end. My concern about valuations is in companies that are not leaders. What has happened in the last year or two is every company, whether they are leaders or not, are getting high valuations. And that is where the bubble might be. Not so much in valuation of leadership companies, but in companies that are not leaders. Having said that, I will say one more thing here, that there is definitely a bubble in angel investing. Traditionally, angel investors have not been good selectors of company. And today we are seeing more and more people making angel investments. And it's not very clear that most of those companies are going to be able to raise future financing rounds, particularly if the market turns south.
Deven, I want to come to you. What do you think about the valuations of companies like Uber? How do you justify this?
Well, we're not investors in Uber, but we know the business. And if you look at a lot of these types of businesses, what you see in Uber, just to use as an example, and I'll just go here based on what's been publicly reported about the company. The growth rates that are been publicly reported in that business, and I think what I've seen publicly reported is gross revenues of $10 billion this year. That's up from a company that didn't exist 3 or 4 years ago. And so there's very, very few companies that you can find that have been able to achieve that level of growth. Obviously, built into that is an expectation that that level of growth can continue. And the dependency for that level of growth to continue is really continued international penetration. And as you know, they're investing very heavily in India and China. And in those countries, the competitive landscape is different. You have well-financed competitors in those places as well. So the question as to whether or not they can justify that valuation long-term will be based on their ability to execute as well in some of the global markets as they have in the U.S. And if they do, I think there is a path for them to for the valuation of that company to increase from where it is today. But obviously, there's risks in that. But to date, they've executed extremely well.
Do you think companies like IBM and Microsoft will survive?
Right. So I think that it's a great question, and I think that one of the things that's clearly happened is that the rate of innovation is increasing dramatically. So the rate of change is increasing dramatically. And I'll just use an example here at Insight. Probably about 10 years ago, we did a CIO roundtable where we had 10 CIOs from Fortune 500 companies come in and talk about the trends that they saw in their business. And we asked, at the time, I asked them whether or not they would be investing in cloud applications. It wasn't called SaaS back then. Whether they'd be investing in cloud applications. And only 1 out of the 10 said that they would consider doing that because of reasons of security and other kind of corporate policies that would prevent them from putting core corporate data applications into the cloud. Today, north of 90% of the Fortune 500 companies are significantly using cloud applications. Right? So what has that meant? Well, it's meant a couple of things. One, it's meant that in certain industries, incumbents didn't move fast enough. So as an example, Siebel was a dominant player in CRM software, consumer relationship management software, didn't really make a quick transition to the cloud. Salesforce came in with a product and has created a $20-30 billion market cap company by being a fast early mover in kind of SaaS CRM, and obviously are broadening from there today. I think that what you're seeing is a reaction from the, I don't want to I hesitate to call them the legacy, but call it the technology companies that have been around for a longer period of time. They're starting to use M&A as a way to kind of bridge the gap between their legacy technology and new technology. So use SAP. SAP has been extremely aggressive in making acquisitions in the cloud to be able to bring that type of cloud delivery solution to what's a very large customer base. So I think that what they need to do and what they, I think, are trying to do is take advantage of the fact that they have a very, very large existing install base. And they also probably have to recognize the fact that them building new technology platforms in their existing structure is very difficult to do. And I think most of them have started to realize that. And so they're using M&A. Now the question is, how well do they integrate that M&A, and how well are they able to take those applications and actually take them into their install base? And I think that's something that we'll see over the next few years. But many of them are using that strategy to try to adapt to emerging platforms.
Narendra, shifting back to social media companies, what's your view on companies like Facebook, Twitter, LinkedIn? What do you think is the future of these companies and the sector?
Well, I think that social media is taking a dimension of its own. It's a question of how does it serve long-term needs and how sticky and useful it is for people long-term. Everything sort of new technology starts out as a bit of a toy, but then over time, it becomes mainstream. And so if you look at something like LinkedIn, let's say, it has really become mainstream in many ways. Facebook is also becoming mainstream. People are using, a large number of people, close to 1 billion people are using it every day. So I think when it becomes the way we live, it is here to stay and potentially grow into related areas. Should Facebook be a platform for enabling commerce? Time will tell, but one can argue that it is going to be, it has the potential to be that. Just as LinkedIn became a platform for recruiting and so on, or possibly looking for sales leads. So the question about social media is related to what practical and day-to-day problems or issues it can address. Just to connect with people and talk with them and post messages is not a long-term growth area. But I see a lot of potential in social commerce, in social interactions, socially building new products, developing new products, social interactions to create new experiences. So I think one can see potential, but that potential has to be realized through actual execution.
a little bit about India, what do you think Amazon is going to do to the e-commerce sector in India? For instance, Flipkart and others in this space, how is it going to impact their future?
Well, Amazon is I would say, an amazing company, what it has been able to do over the years, and certainly it has won the US market, or at least a US mind share for now. But I think if you would dissect Amazon in many ways is fundamentally a logistics company. How to deliver products, and a payment company, a logistics and a payment company. What they sell is pretty irrelevant. They can sell anything they want, from books to whatever else they need to do. The question really is their logistics model the right model for the long term? That's kind of the fundamental question everybody has to answer, Amazon has to answer. And one can argue that in many situations, that model may not be the best model. Marketplace, like we see in China, Alibaba is 10 times larger than the next company in the space in terms of a gross merchandise value. So the question is going to be, can Amazon adapt to a new kind of a business model, a new kind of a logistics model? There is companies like Jet.com starting up in the US trying to disrupt the Amazon model and basically leveraging logistics to drive purchases and pricing. So it's going to be, it's a very kind of a complex question. If you were to say the world were going to be the same as it is today, Amazon is going to be a winner. But I, for one, don't believe the world will stay the same. And like every technology company, every technology success, the world changes from there. I mean, 15 years ago, 20 years ago, you would have said that Microsoft is going to be the ultimate winner in technology. One could not even imagine companies like Google coming around, or Facebook happening. But things change.
So should one be investing in the e-commerce space in India or no?
Well, I have to sort of maybe say a disclaimer. We are a very large investor in e-commerce space. In India, we are a very early investors in e-commerce. In India, we were one of the lead investors in Snapdeal and Craftsvilla and all kind of other companies, ShopClues and so on. So my view is going to be somewhat biased. So I believe that yes, the people should invest in e-commerce in India. Amazon is not going to have a 100% market share, by far from that. I think the success of each of these companies, rather than talking about the space in general, I would say investors should look at each of the companies individually. Are they executing well? Do they have a game plan that creates long-term value for the buyers as well as the sellers? And things of that nature. How good is the team? And the fact that Amazon has more capital than anybody else, that is quite irrelevant. Any company that is doing well can raise capital. So my view is, yes, e-commerce will be big in India. Amazon will be a player, will be a key player. They are not going to win the whole market. So investors should look at each company on its own right and see what they are doing right, where they can do better, what the quality of the management team is, and really make a decision based on that. I would say it's really a bottoms-up decision, in terms of what company can do well, rather than a top-down decision.
But there's no earnings growth in most of these companies. So how do you justify their valuations?
That's a very good question, is that why are these companies don't have earnings? And then if they don't have earnings, are they never going to have earnings? Well, the way we think about a lot of this business is to say that let's sort of go back to the unit economics. When they are selling a shirt or when they are selling a laptop, are they making money on selling that laptop or the shirt or whatever else they are selling? Now, if somebody told me that the unit economics is such that at that level they can never be profitable, then I would say it's not, that company should not really exist. And there are a lot of businesses in the US and India where the unit economics is such that it's impossible to see, very difficult to see how those companies will become profitable. In the case of Snapdeal or Flipkart, the unit economics is still quite attractive. The question really in the end is, how do you create a company where overall at the top level they can make money? there is an opportunity to do that. I mean, clearly it has happened in every market, South America, China, so there is really no reason to believe it won't or can't happen in India. But, the devils are always in the detail. How does each of the company make that kind of a thing happen? Not as straightforward. I think the questions you're asking are very valid questions, and I'm pretty sure that the companies are asking that question internally and the investors are asking that question as well. But I would not make a sweeping statement that these companies are going to continue to make losses or they can never become profitable.
So what's the next big thing you expect to see? I mean, what new technologies are going to change the world?
Well, we have been a very big believer, in analytics, big data, analytics, basically getting computers to make faster and better decisions than human beings can make. But at a very high level, I would say that if I knew what the next technology was, I would have already funded it. And we learn from the entrepreneurs what is the possibility, what are the possibilities, and there are all kinds of ideas that are floating around. So let's sort of go back to the big data or analytics. It is certainly an area that's going to change the way we live, the way we make decisions, the way we buy, the way we buy houses, the way we drive, the way we find work, and things like that. So at a very high level, analytics, people will call it machine learning or big data, that will clearly change the world.
Deven, what do you think is going to be the next big thing after Facebook and Alibaba?
It's always a hard question to try to pick a company. So I think what you're going to see, what I would say is if I had to pick the market where I think you're going to see multiple, north of $1 billion, IPOs or valuations created over the next 5 years, I actually do think it's going to be in enterprise software. What you're going to see in other categories is you're going to have every few years you're going to have an Uber that, if they continue to execute, will probably be a public company with a valuation that's in the tens of billions of dollars. And I think it's entirely likely, and as I said, we're not investors, I think it's entirely likely that will happen. But I think one of the things that we try to focus on as an investor is you can't, in our business, just be looking for home runs. We're a mid to late stage investor as opposed to an early stage investor. And when you're an early stage investor, you tend to just look for home runs. And you know that a large portion of what you do is not going to work out. And our model is different because we're investing in companies when they already have revenues. By the way, half of our portfolio is profitable, to your earlier question. And so there are many, many profitable software and technology companies. You just tend not to read about them in the paper.
Narendra, how do you think India is going to be placed versus the US and Europe in terms of getting investments?
Well, I think the US will remain the center of innovation, for a variety of reasons. But India has the culture, the manpower, the skills to become another center for innovation and creation of large sort of game-changing companies. And Punita, we are investing in India because I truly believe that there's an opportunity to create the next Google or Facebook or whatever your favorite called Uber out of India. So India will play a big role for cultural skills, variety of reasons. The other benefit of India is that you have a local market. You can test the products. And people in India, younger generation particularly, are willing to try new products. In Europe, the biggest issue is there is skills in Europe, the market is there, but people tend to be conservative and they don't want to try new things. And ultimately, that is the biggest deterrent for the creation of a sort of innovation ecosystem. I'm very bullish on India. We have a lot of issues in India as well, and hopefully, as our new Prime Minister PM Modi is working on, some of those issues need to get addressed. They are getting addressed. We are very hopeful about there are more issues getting addressed. So I think India can be certainly the second innovation center around the world.
Deven, last question. What advice will you give to budding entrepreneurs in the technology space in India?
Look, I think there's a huge don't try to just do what everybody else is doing. It's the same thing that I tell people in the US. I think there's a tendency that people have is that they see that Uber is successful, or they see that Flipkart is successful, or they see that something else is successful, and they basically try to go create the next Uber or the next Flipkart. If you look at the best entrepreneurs, and Uber's a great example, Uber was a bunch of guys who decided that they didn't like the way taxi service worked in Paris, and came up with an idea to basically buy a couple of black cars and share it amongst friends. They were solving a personal pain point. And they solved the personal pain point so well that it turned into a product, and then that product got widely adopted. Too many entrepreneurs, in my view, try to find a problem that they think there's capital for. As opposed to trying to solve a problem that needs to be solved, capital will find it. So my suggestion to the entrepreneur in India is no different than my suggestion to an entrepreneur in China or Romania or the US. Find a problem that you're really passionate about. Find a great solution for it. The rest of it will take care of itself.
Narendra, will you invest right now or will you wait?
I would always invest good times or bad times in exceptional entrepreneurs.
Anything else that you'd like to share with the viewers?
No, Punita, it's been a real pleasure to talk with you, and very insightful questions as well, and hopefully your audience finds the discussion useful.
Thank you both for joining us today and sharing your views. Now I'm going to go to Tanveer Gill and ask her to share some data on what she's seeing in the US and in India. Tanveer, over to you.
Well, thanks, Punita, for that. Taking a cue from what our guest stated in the discussion, and I'm quoting a Times of India report dated end August. In the consumer tech space, the benchmark really is Alibaba, and you've seen valuations there correct substantially over the last 12 months from a valuation of $230 billion a year ago. The business is currently being valued at $165 billion. The Indian counterparts there, Flipkart is being valued, last report numbers, at $15 billion, and Snapdeal is being valued at about $4.5 billion. And the feeler on the street is that, with this big correction coming in for the global benchmarks, you would see a bit of a rub-off in Indian valuations too. A bit of rationalization happening there. In the food tech space, you have Yelp, which was valued at close to $6 billion a year ago, is now being valued about $1.5 billion. And the comparison there is drawn to restaurant review company Zomato, which is close to $1 billion in overall valuation. So, it just remains to be seen how this story plays out. In fact, Nikesh Arora of SoftBank highlighted this a few weeks back as well. He's worried about the current state of valuations and believes that only businesses which add value should get the kind of multiples that they are garnering from the venture capital or the investor community at large. So remains to be seen which way the story plays out, but some sort of rationalization and a reality check is definitely coming into the space. In fact, that brings me to my question for you, Punita. How are you looking at the outlook of the global tech sector? How are you mapping India's position within the same?
Well, as we've just heard today, there's still a lot of opportunities in the tech sector. There are pockets of overvaluation, but I think there is still a lot of growth, and investors are continuing to look for opportunities. In fact, companies who can transform the way existing business is done and can leverage technology to disrupt existing business models should see plenty of demand from investors. India should actually fare pretty well in this space, given how many Indians are leading companies in the US as CEOs, especially in the tech sector. So Indians in India should be inspired by that and innovate here, right back in India. Well, that's it for me on this episode. Thank you very much for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.